This is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, April 19th, 2024. Wanted to get one out to you. I just fired off a post, and so I'll expand my thoughts. I know I've done this long enough. I read the comments. Some people can't, what are you talking about? Are you bullish, you bearish, you long, you short? Guys, I say this often. I wear a lot of hats. I'm an active trader. I'm a swing trader, and I also try to speak to those that come to the service that don't have those active trading skills. So, I reversed earlier today. I was talking about, the longer term. I still maintain these targets very much. I just think the odds are pretty good for a bounce here and worth enough that, the way I see it, again, being that I have the luxury of full time, being in front of the computer and can do this. And so 2 clicks of the mouse and I'm, actually won with interactive brokers. A reversal to reverse a position from short to long is a single click, a single trade. If you're, short 10 contracts NQ, you can go long 20 or 50, whatever your number is, and just enter that in the order field and it'll immediately buy 20. So it closes your 10 short, puts you 10 long, and that's how a reversal works. Now, other brokers, you have to cover short and then do a new order to buy. If you don't know active trade, if you're not used to that, if it's not in your wheelhouse and you're not comfortable, please learn paper trade, or I speak to the swing trader. I think the odds are worth, pretty good for a bounce here, and maybe not. Like I said, I may regret it, and I may be short by the time I close this video out, and long before I get out to you, I may be short again if I see something I don't like. But I'm trying to get this chart out to, or this video in real time. So I said that T2 was effectively hit. And what I mean by that, if you're new to the site, you probably, I haven't said this recently, but I say it all the time. The targets that I give are the actual support levels. Way back in the day, 10 years ago or more, when I started this, I used to sit there and adjust and say, 413, 41 is the support level that they're likely to buy. Then I'll put the target, I'll adjust it, and it's all kind of relative to the security. In other words, something that swings in bigger percentage terms, you may have to give it a little more room. But I would rather, where I'm going, if I'm targeting, if I think the markets are going to bounce on, you see on the 60-minute chart, I have it even lower, 412.95, and that's where I can see us going down to. And I'll continue to add a reverse, nothing too crazy because it's a counter trend trade, and no buy signals, just a fall too close to support. And I don't want to miss a sudden turn, but I'm willing to and plan to add down here because, again, 412.95, you can see on my 60-minute chart, when you sharpen the pencil, is the level. And why is that? The dailies are more rough, but then the 60s you get down, you can see right there that major reaction high. We had a bearish rising wedge. We even shorted it back then down to hit the bottom, our second target, and reversed it there. And then there was a gap above that level, proved to be resistance with a gap. So, that's... But again, here's how it is. So I just reversed right off the low so far, right when I got that post out here right before. 0.5%. Okay, so I think now we can melt down. NVIDIA's broken support. I've been waiting for that. That's another big check mark. Like I said in that post, the day's not over. If they ramp it hard, NVIDIA could park back on 840. It's possible, or close enough that you have to squint to see if it's a breakdown. And if you do, I always say if you have to squint, give it the benefit of the doubt. Anyway, so is it worth it, milking out another 0.5% when we could have there's that 421.50-ish bounce target. That's a minimum. See, just bounce back to the trend line. Even intraday, they buy it up. And then 412.61, and then I have a level here around 425.22. And if and when that bounce develops, whether it's on another thrust down, really no solid signs of a reversal yet, then I'll kind of assess it as it goes. I don't think we're going all the way back to 433. It's possible we go back there and blow right past it. Anything's possible. I'm speaking in probabilities. So that's that. So let me go over the other charts, things that I'm looking at here. You can see the RSI, as I pointed out this morning. Well, I pointed out the PPO at a level which indicates, it's getting very oversold, indicates a bounce is likely soon. Then you have the RSI. If you notice down below, I think, you can see it in this video. I've got the screen. I've had forever and a day, if you note in the previous videos, 2172. It's kind of a random arbitrary number. It's not arbitrary, I'm sorry. 30 is what charting platforms will give a default oversold. But to me, QQQ is not oversold. It is sometimes, and you bounce. You can see a lot of buyers step in and buy the 30 level. But the deep oversold, the ones that rarely get any more oversold, that's the extreme, is about 2172. And I'm circling where they are, and you can see did you want to go long or short? So if anything, remember, everything in trading, I frame every single trade from our perspective, risk reward. Right now, markets crash and into close. I don't think it's possible, but the reward to stay short is not worth it for me. And the risk of being caught in a sharp counter trend bounce, they buy this into the close. Remember, we're still fresh off the highs. It might feel super bearish to some of you, and I think we're going a whole lot lower in the coming weeks, but we're down from the day we shorted that post. We nailed that post FOMC the day after the FOMC meeting. Thursday, that high. I'm looking on another board. And so right here, and that was our current short entry, for this trade. We're only down 7.5%. So it's not that much, relatively speaking, off the highs. And where I'm going with that is there were, again, I've talked on sentiment, not just on this site. This is a little micro kind of sphere. It's very small sampling data, very few people, but I could, not just the amount of, capitulation. And folks said they're done shorting and they're going to just start buying, and others just angry, with bearish analysis. But then, every now and if I would turn on Bloomberg or CNBC or read, my news feeds, it was unanimously bullish. Where am I going with that? Well, okay, 7% drop. Dip buyers are going to come in. How many people have been waiting to buy NVIDIA and it wouldn't let them in, and just kept going up, up, up. So now, and I speak to the bulls, and maybe the bulls are right. And look, you got a 17% drop in NVIDIA. If you liked it at 840, this is a joke. When I was a broker, we used to joke around, not directly to our client, kind of in the back room. And I ran a very honest and very integrity, but there was, a couple guys in the office. It would be, he had, old school broker, and he would be, don't be sore, buy more. If you liked it at 100, you got to love it at 50, that kind of thing, on stocks. And that was back in the boiler room days. And again, I worked for reputable firms, Merrill Lynch. We didn't, have any shenanigans like that. But what I'm trying to say is there is something to be said about that old kind of joke. If you loved it at 100, meaning if you liked it at 100, you got to love it at 50. Stock got cut in half. Well, if you liked NVIDIA here and you were looking to buy it and it wasn't letting you in, how or you liked it here, how can you not like it 17% cheaper? So all I'm trying to say is the dip buyers are going to sooner or later come in here, and that's why I list multiple targets. Upon the initial tag of each target from above, the odds for reaction are good. Now I assess when we get to each one. I told you last time when we hit T1 the other day that I expected the reaction to be minor and fleeting and not even worth gaming, and I didn't game it. Stayed short, and we parked on it. We traded on it. That was Wednesday. And then we traded on it again and above it on Thursday. And then we broke it. And then I made clear, okay, that's what I expected. A very minor, not worth gaming reaction there. And then we went on to the next target. And again, as I started to say in the beginning of the video, these are the levels, like I said, that where a reaction is likely. But if everybody's looking to buy 413 or 415, a lot of people, I'm not going to hold out for another fraction of a percent. I'd rather get in a little early, scale down, than to miss a turn. I've done this long enough, and that's why. So that is effectively hit, and that's that. And of course, it's just I look at the 60s, I look at the 15-minute charts. I've been looking more at the futures, but very much at this. This is had my eye on this quite a bit, and there's also a reaction low right there. I don't have a line on it. I just put on that candle on the 31st. So that's enough. I don't want to beat a dead horse. I just wanted to tell you that's kind of what I'm doing, but also is not necessarily right for everyone. And, I may regret it. We could turn around and dump, but I'm going to try to game a little counter trend bounce here, and I'll assess it as it goes, is what I was saying earlier. So I showed you some potential bounce targets, and I still maintain these targets for, if I was on vacation. My next vacation's not till June. I'm going to be gone for a week, 10 days. And that's going to be in Italy, so I'm not going to be able to, post actively. In that kind of situation, I wouldn't be doing this. I would just look at this and say, I'll either maybe, set some orders to reduce exposure there. That's usually what I'll do if I'm not going to game a bounce. When I see the odds, the risk reward's no longer very favorable at that moment, and the odds for a bounce are decent,
then at the very least, I'll do one of two things normally. I'm just talking again. Let's say I was, on my next vacation and away from, I didn't have access to a computer. Set a stop to protect profits, whether it's a partial or a full position, or just book some profits, lighten up there, and then look to re-enter those shares, whether it's a partial or full position on a bounce back to resistance. Okie dokie. Let me give you a couple others here. NQ 15-minute, what I call an ADL, almost divergent low. There's the slope on that line 0. So we're, even if we had that other thrust down, like I said, I could see a little more, one more dump down. It would still be at even better. Well, I'm still a little above support now. So another dump down will just give us, this is a 15. You don't see that support here on NQ, but it would give us still a divergent low, as long as it's not much more and doesn't take out. See the divergence lines here, positive aka bullish divergence started all the way back here on the PPO. If I go to a 60 or 120, I think I have queued up. There's a 2-hour chart, 120-minute candles. This was, this was resistance back here. Resistance once broken becomes support. What I'm doing is just going over and showing you, reasons. So there's enough evidence. I always use that, court of law thing. So there's enough evidence in the chart that, hey, we may bounce. We're certainly oversold. I told you this morning we're getting, the odds are starting to go up based on where we were, and they obviously went up more the deeper you go down, and especially when you're at support. So that's it, guys. If I keep it tight here, I can get it out to you. I already got the post out, so you know what I'm doing if you want to do it or why I'm doing it, and I kind of made clear there. And I'll watch everything else. I'll watch NVIDIA. These are the things that bulls want to see. Like I said, NVIDIA, don't underestimate how much can happen in just a few hours. We're comfortably below that now, but the day isn't over. This is a daily chart. So if it gets near 840, then boy, you could see more of a rally, and then boom, we pop that trend line. So who knows? Maybe I'll stay long into the weekend. I'll let you know before the close. Apple still below the purple, 166, 61, big level to me, but has some potential to rally and park it up there. Or we can just dump and collapse into the close hard. So as I said, this is not a follow me site. I will convey to you my thoughts if and when I can, but there's, you remember I used that back a while ago, that analogy from one of my favorite movies, Heat, where De Niro and Pacino are sitting down at the table. If you saw the movie, you know the characters, who they are. And Pacino, De Niro, who played Neil McCulley, the thief, professional thief, said, don't get attached to anything you're not willing to walk away from in 30 seconds flat if you feel the heat coming from around the corner or something like that. That's how I view trading. If I have a position and I might love it, it could be gold. It doesn't matter what the trade is. If something doesn't smell right, the charts aren't acting right, it's gone. You just, don't get emotionally attached to those trades. And so that's what I'll do on this one if it doesn't pan out. But right now, it could be a pretty good ramp too. I could, like I said, I try to convey my thoughts as best as possible. In that email I got out to you, I said we could see an explosive rallying to the close. We could see a short cover rallying. It's a weekend. You got a lot of, and I know how this is how I see the market working. There's always flexible traders like me that like to go long and short, and I'm sure I'm not the only one that's been trying to short the market and looking for entries. And so these shorts have just gotten banged up lately. We got out here at the lows and moved up. As I mentioned, there were a lot of longs. We came into the year short when the market had the biggest drop. We covered right at the lows, went long. I kind of went over that before because some of the folks on the site were gaslighting as if we didn't, if I had short signals or short trades on the whole year. But where I'm going is the shorts that, you got to just pick little bits off the bone. You had to be in and out quick. And so where I'm going is usually when the market turns, the first big move, you got a lot of shorts that are just happy to get that little win, and they want to start booking profits and run. So that's why you could at this point. Now, again, T2 goes, 413, and I think it will go next week. I made that clear in my thing. So whether we bounce or not today, whether we bounce or not, and we could open again on Monday a little below there and bounce. I think next week we'll probably hit the next targets. Remember my targets on this board here. So bounce or no bounce, and whether it's next week or not, but I suspect it'll be, because like I said, things will start snowballing. That was my expectation long before we took out 433, is that we would do it, and when we did, the selling would start to accelerate. That's what acceleration looks like. See these big red sticks with the big only green candle, basically a flat day. So not really an up day, ever so slightly. My candles are set to show whether, open previous day's close versus that day close. So if it's a green candle, it means you closed higher than the previous day, but that's where you close basically a flat day when you see a little doji candle like that. So that's that acceleration, and that's it. Let me just get the video out to you guys. You guys figure out what to do and how to do it. Like I said, active trading, you got to be quick, and don't rely on me to tell you, because I can't, when things are moving fast, and that's what happens when the VIX expands. Things move fast. The rallies are quick. If you blink, sometimes you miss them, but they can be powerful and worth it. Anything 1% or more on a give back on a counter trend bounce trade, when you're trading, leveraged futures and all that, like I do, it costs you a lot of money. And so if I can, sidestep the give backs or even profit from them by reversing, it really adds to the bottom line when you swing, if you're swinging down a trend. If you can successfully, sidestep or even turn around and reverse and profit from the counter trend rallies to your end goal. So you can turn which all along I said it's not a monster trade. If we hit my fifth target, we're talking 15% off the highs. But if you do that right and sidestep it, you could turn it into a 20, 30 plus percent, swing trade by sidestepping the counter trend bounces and turning them into, instead of losses or give backs on your profits, into gains, and then get back short. All right, I'll shut up now, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. If I don't do another one, have a great weekend.